All right, well, the true test for gold will come when our next guest throws in the towel. To simply call him a gold bug is an insult to gold bugs everywhere, not since Mr. T has a man loved gold this much. Talking about Peter Schiff of Euro Pacific Capital, he has a fascinating article on the dangers of the Fed on his website, europac.net. Make sure that you check it out. Peter, always great to have you on Futures Now.
Sure. I can't throw in the towel. I own that towel.
There you go.
All right. Well, listen.
That's a golden towel.
That's the perfect setup for me, because every time you come on the show, you talk about the long-term picture for gold. But now we've seen 2 straight quarterly losses for gold since 2001. And Peter, the thing is, the viewers, they live in the here and now. Isn't it possible that the gold trade is done?
No, I think it's very unlikely. Someone just said that all the signs point down to gold. I mean, I guess if you misread them, maybe they do. But from my perspective, everything still points upward. Sure, gold's gone down for a couple of quarters. I mean, there have been quarters where the stock market has had back-to-back down quarters. I mean, people aren't writing off the stock market. I mean, maybe it's a what have you done for me lately attitude. But I think you have a lot of people that misperceive what's going on. They think that there's a safe haven in the dollar and U.S. Treasuries. They're wrong. They believe that the hype about a U.S. recovery. I don't think there is a recovery. And in fact, if you remember, gold did really well going into the last financial crisis. Maybe it's appropriate that it's doing poorly going into the next one, because I think the crisis that we're headed for is much worse than the one in 2008, and I think it's going to be a very good environment for gold.
So that's an interesting point. I mean, you bring up so many things there, Peter, but let me back up for a second and talk about the U.S. economy. In terms of the fundamentals that we're seeing here, it appears that the housing picture is getting better. It looks like the earnings picture is getting better. And when you add on top of that as well that we're looking at this stronger dollar that doesn't appear to back off, how can you say that we're not going to see gold go lower?
Well, appearances can be very deceiving. First of all, when you talk about the housing market, housing prices going up, more homes being built is a bad thing. We don't need that. Houses are still overvalued despite the decline, and the only reason that they're moving up is because the interest rates are artificially low. The Federal Reserve is buying up all these mortgages and otherwise wouldn't be able to be originated. So it's all this government props that are forcing the market up, but this is damaging the economy because resources are being diverted to housing when they should be going someplace else, but they're not. And eventually, this phony rally has to come to an end, and there are going to be grave consequences for it, just like there were the last time.
Right. Well, I agree with you that there's a lot of folks out there that would say that the Fed is definitely propping up this economy, but at some point, as you said, they're going to have to back off. They're not doing it for now. They're probably not going to do it at least for the rest of the year. So wouldn't you ride the rally and switch out of the safer haven assets?
No, I mean, I don't know how you can be smart enough to time it precisely to think, well, I'm going to ride this phony rally until it ends.
They've told us, Peter, that they're not going to back off until unemployment goes down. So we're going to be watching those numbers really closely, at least that's in terms of rates.
Unemployment is pretty much never going to go down. The only reason they're going to stop the QE is because there's a currency crisis. So they're not going to stop until it's too late, until the dollar plunges because inflation is taking off. That's when they're going to try to remove the punch bowl, but it's going to be much too late. But I believe the Fed knows that the economy is 100% dependent on this artificial stimulus. So they have to keep it here indefinitely, but you can't keep it indefinitely because you destroy the currency. So we're headed for a crisis one way or another.
All right, well, we have a lot of people out there who are looking at the same market that you're looking at. We're all looking at this together. They're driving stocks up. What are they seeing that you don't see?
Well, again, this is the same thing that was going on back in 2007 when people saw sunny skies as far as the eye can see. They thought the housing increase in housing prices was real. Guys like Ben Bernanke said that housing prices were just going up to reflect the improving fundamentals. So, I have a history of seeing things that other people don't tend to see, and I think people's judgment, again, is being clouded by the illusion created by the Federal Reserve. We don't have a real economy. We're simply borrowing money and spending it, and the only reason we can keep borrowing is the Fed is doing the lending, and interest rates are at rock bottom, so that we can pretend that we can afford to service the debt, which we can't really do in a real interest rate environment. And it's kind of ironic that a lot of the problems in the world originated with the Federal Reserve and our cheap monetary policy that a lot of other central banks emulated. And now as some of these problems blow up, like you're having it in Cyprus, we actually benefit. We benefit from all the problems, even if we cause them, and even if the problems in America are worse. And because as the world, continues to, to erupt into trouble spots, we get to borrow even more money. We get to go deep into debt and buy more stuff that we can't afford with money that we didn't earn.
You bring up Cyprus, Peter, and that's a really great point. Obviously, a lot of eyes on Cyprus. Why isn't gold moving on this to the upside?
Well, look, it's moving in terms of some currencies. I mean, look at gold in yen, look at gold in British pounds. So depending on your perspective, people who had gold in Cyprus in a safety deposit box are in much better shape than people who had euros in a Cypriot bank. So gold is still acting as a store of value. It's just that temporarily the dollar is gaining strength marginally. I mean, it's not like it's soaring. The dollar index is around 83. 10 years ago it was 120. So the dollar has weakened considerably in the last decade, but it has strengthened a little bit now, and that is stealing some of gold's thunder. And I do believe you have a lot of speculators who are selling gold. But if you look at the real demand, real physical demand for gold by investors, savers, not speculators, that demand continues to increase. And I think gold demand is increasing among central banks. And I think central banks who are buying gold really want to own a lot more gold than they currently have. They're just trying not to push up the price as they buy it.
Well, our traders want to get in on the conversation here. Grizz, let's go to you first.
Yeah, Peter, you talk about the weakening dollar, but what I see is that central banks around the world are weakening their currencies at a faster rate than ours. So how does our dollar go down compared to that?
Well, I think that might be temporary. I think that ultimately we're going to have to create more dollars than the Europeans' euros or the Japanese yen or other countries that are certainly in much better shape than any of those three. We have to keep printing money. That's how we survive, because we don't manufacture enough stuff. We have to import the things that everybody else manufactures, and the only way we can pay for it is by printing money. And we have this enormous debt that we have to service, and when interest rates go up, the cost of servicing that debt skyrockets. If the government had the same interest rate cost that it had when Ronald Reagan was president, right now we'd be spending $1.5 trillion a year on interest on the national debt. Instead, we're paying $228 billion because of the Fed. But we can't keep that up forever, and then you're going to see the weakness. But in the meantime, with all these central banks creating inflation, prices are rising. Look at oil prices. Look at food prices. One of the reasons that 47 million or 48 million Americans...
They don't include that in their inflation forecast.
Exactly.
Right. They don't include that.
Excuse me? Well,
they don't include that.
Well, they don't look at food and energy. There's a lot of things they don't include. But the government also misrepresents the CPI based on the way they calculate it.
Right.
Look, prices are rising a lot faster than what governments admit, and it's not only in the United States. Prices are going up. My point on food stamps is one of the reasons that 48 million Americans are on food stamps is because food is now so expensive. And, the only reason they're not complaining about it is because they're getting the food for free. But
Peter,
if we didn't have this explosion in food stamps, a lot more people would be picketing in the streets about the rising cost of food, because there is a lot of inflation. The government just doesn't want to acknowledge it because they don't want to stop it.
All right,
know
Peter,
that the only thing
we got your stance on inflation for sure. But before I let you go, look, I want to just get a quick last point from you. Are we going to look back a year from now and say that this was the time to buy gold?
Well, I think it's been the time to buy gold for a while. Whether or not today is the rock bottom, it's probably not. Look, the short-term trend is gold's headed down. But I don't think it can go down much from here. I think if you look at a long-term chart, it looks like a bullish pattern to me. It looks like a pennant, a continuation pattern. So I think the next big move in gold, the big move, is to the upside, not to the downside, and people should be buying this dip.
All right, Peter Schiff, thank you. No change in stance there.